So are we in a crypto bubble right now?
Again, I would say yes, but again, that obviously does not come with a prediction of like when the bubble's going to end, because that's notoriously hard to predict.
What is it, man?
I keep telling you, it's a cryptocurrency you can trade for conventional money.
Oh, so it's a hustle.
Yeah, it's a hustle.
But, Elon Musk tweeting is something that the crypto space has only been introduced to for the first time, literally, last year and this year. I think it's reasonable to expect a bit of craziness, but I do think that the markets will learn. Elon is not going to have this influence forever.
In today's episode, we're going to be talking about a whole lot of factors surrounding this ginormous dump as far as Bitcoin is concerned. Obviously, we're also going to talk about the market psychology and just what we are supposed to be doing in order for us to maximize off of this particular Bitcoin crash that we recently had. So the first thing that I have to remind you is this is absolutely normal. And if we take a look at the previous bull markets, right, we obviously experienced situations where the prices of Bitcoin and cryptocurrencies were experiencing major sell-offs, but the Bitcoin rally and the crypto rally in general did continue. So during these bull trending sort of markets, right, it is absolutely normal and common for the prices to sort of kind of retrace. But this time around, it's a little bit different for me. It's a little bit different in terms of the EMAs, the exponential moving averages, and these are represented by the red and the blue line. So every time we would fall below these lines, right? So the EMAs are pretty much a mathematically derived sort of parameters that really represent the strength in terms of the price. So as you can see from history, right, this is a chart stemming all the way from 2011. So as you can see, we always trailed and found support close to these EMAs, but this time around is a little bit different. If we take a look at this particular situation that we are having, right, we are way below the red EMA, which happens to be the larger EMA, which happens to be the 20 EMA, if I'm not mistaken. If I take a look at this is the 20 simple moving average. This is the simple moving average, and the red one is the 20 simple moving average, while the blue one is the 6 simple moving average. So historically speaking, right, we always sort of found support, especially during a bull market, right? We always found support on the 20 simple moving average. We've got that situation over there, that situation, and then here, this was obviously the end of the bull market right over here. As you can see, in 2013, we started trading below, and we were using the red 20 simple moving average as some sort of resistance. The only time we started going above it was when we continued with the bull market right over here. So are we going to be using the red line as resistance in the near future, and are we going to be sort of getting rejected off of it? If that happens, well, then we are in trouble. So if we take a look at these intersections that are about to happen, so whenever you have that type of intersection, it's known as a bearish cross. So that could really mean a whole lot of trouble as far as Bitcoin is concerned. However, I'm not really that bearish, because I know for a fact that this is a major corrective wave pattern on the on the monthly time frame, and this is absolutely still trading above the previous all-time high. So as far as Bitcoin is concerned, right, if we take a look at the candle closes, right, the previous bull market was successfully above 14,000 US dollars. If you guys want to use the wicks, then we could adjust that and say, the bull market was the all-time high. The previous all-time high of the previous bull market was above 16,000 US dollars. And if you guys really want to be like precise, we could, say that we were at 20,000 in the the peak of the previous bull market, 19,000 somewhere there. So technically speaking, for as long as we are above this particular threshold, it is a bull market. And this simple correction that we are having is nothing but a normal healthy correction, because we have been trending for the past 6 months, and it is absolutely natural and normal for us to sort of trend. And usually what happens is the price tends to go back to its previous resistance, in this particular case the previous all-time high, which is around 14,000 to 19,000. But I'm not saying that the price is going to go to 19,000 or even 14,000, but historically speaking and statistically speaking, right, the price usually tends to be attracted to the previous resistance. And to be honest with you, right, ever since we have been pumping for the past few months, we haven't really retested this particular resistance turned into support. So of course, for me right now, I'm only looking at 24,000 as the most extreme price point that the price of Bitcoin can go to. So if we're going to have like extreme bearish scenarios, right, we could definitely wick all the way down to around 20,000. But that is a scenario that I'm not really looking at this particular moment, because I know for a fact that we are really dwelling on a whole lot of support. So if you take a look at the 3-day chart, right, all this cluster of price trading action is a lot of support, and it's going to take us a while for us to sort of break this particular area. Going below 29,000 is going to take a lot of selling pressure. Otherwise, or rather, we might wick below it, but we're going to be quickly bought up, okay, because we spent an entire month trying to sort of destroy this particular trading cluster in terms of breaking this resistance right over here. So we do hold like a lot of significance here. There's a lot of buyers, and there's a lot of trading action, and there's a lot of price dispersion, if I can put it in order, or rather in terms of distribution as far as Bitcoin accumulation is concerned. So obviously the people who were getting to like accumulate and purchase Bitcoin here, right, these guys are not easily going to like sell off their cryptocurrency, because it signifies a loss for them. So we are most likely going to be having like the prices sort of being held properly here, because the people who got to buy in around this particular area, they don't really have any interest in selling, because if they sell, it's obviously going to be a loss. However, if these guys begin to crack, then we're most likely going to come back down to sort of the previous all-time high, which is around close to 20,000, and this is where we're going to sort of begin our trading journey and price discovery, and just seeing what's going to happen. So if we take a look at the 3-day chart, right, on the 3-day we did already have like a bearish cross in terms of the 6 simple moving average, trading, or rather crossing below the 20 simple moving average, which is a very bearish situation. So obviously we're going to experience a little bit of a pullback, because we just can't indefinitely continue dropping like that. It doesn't happen. We just don't drop and crash like that. So what's going to happen is we're going to have a retest, and if or when the 6 simple moving average, which is a blue line, if it begins acting as resistance, right, then that is obviously going to be very, very bad, because during this trending market, right, we saw the 6 simple moving average acting as support. Right over there, it was acting as support, and then it was also acting as support. Then finally we broke below it, and it sort of turned into, it's probably going to turn into resistance. So the next test is obviously going to be us hitting the 6 simple moving average, and if in case we end up breaking above it, right, then the 20 simple moving average could potentially become resistance. So there's a lot of talks out there in terms of what really caused the market to sort of dump. One of the best technical answers that you ever come across is it's because of the loss in momentum. So once we reach this particular area, right, we obviously started experiencing a very telling type of situation and story, whereby we didn't really experience drastic price pumps and price discovery towards the upside. The highs became significantly lower and lower. So that was just signifying that the bulls were losing momentum and there was like a loss in terms of momentum. So when that usually happens, obviously eventually the other end of the spectrum is going to become dominant. And this particular case, right, the bears became way too strong and the price ended up dropping. Okay, however, just like I told you, right, you always have to remember that this cluster of trading action is going to play a significant role. So right over here, we're obviously going to sort of range and then discover where we're going to go, whether we're going to end up breaking towards the downside or towards the upside. I just did the opposite of that. Yeah, towards the upside or towards the downside. So that is something that we are going to discover. But just like around this particular cluster of trading action, right, previously, it took us a while. You see, we dropped down, found support based on this particular trading action, which is obviously here, and then started trading, and then we're trading back and forth right around this particular area, and then finally made a decisive decision. So what's going to happen this particular week, right? This is the 23rd of May. Today is a Sunday, right? So from 24th all the way up to around 30th, right? We're obviously going to experience sideways action with BTC while it decides on where it's going to eventually end up going to. So in terms of the news, right, why did the price of BTC kind of drop down? So according to this particular article and according to some rumors out there, a lot of people are saying that Elon Musk is sort of single-handedly manipulating the markets. But I just have to remind you that this loss in momentum happened way before Elon Musk even started tweeting these bearish tweets, and you can't really pinpoint to him because it's obviously going to take like a lot of market coordination in order for the cryptocurrency markets to just, even move by about 10%. It takes a whole lot of money. But due to the fact that Elon Musk is a very smart guy and he has obviously financial advisors, and there are, some hedge funds that are obviously in contact with him, allegedly, okay, because you might get sued with these things. So these guys already know what's happening. They already know and understand what's happening with the chart. So it's one of those situations where there is, causation and correlation, if you know what I mean. So these guys already know, they already pinpointed the loss in momentum. So it was just like hitting the nail on its head, and eventually we did manage to crumble and just drop in value. So according to this particular article, right, USD bounces off multi-month lows. Okay, so the USD, the dollar index is obviously gaining strength and momentum, so that obviously prompted other markets to sort of crash. So according to this, right, Tesla CEO Elon Musk bashing Bitcoin's energy consumption is the narrative of the moment everywhere, but some classic hurdles to fresh price gains are also back this week. Among them is the strength of the United States dollar, which is attempting to stage something of a comeback after a losing streak that began in late March. At the time of writing, the US dollar currency index DXY, which measures the USD against a basket of trading partner currencies, had bounced off long-term support to reverse its downtrend. DXY traditionally inversely correlated with Bitcoin, and together with limp stocks, the conditions are right for tripping up bulls progress. So basically what they're trying to say is whenever the USD index kind of rises, right, it has an opposite effect on the stocks and Bitcoin. So whenever USD index goes up, Bitcoin and cryptocurrencies usually tend to suffer in terms of price depreciation. And then the other thing is a lot of tech stocks are in trouble because there has been some rumors around China, which is allegedly trying to ban some cryptocurrency commerce stocks, and there's a whole lot of different pressure. So there has been like quite a lot of different things, and obviously last week we did experience a little bit of a shake out in terms of the traditional stocks as well. So these are the things that are sort of also getting to affect Bitcoin as well. So lastly, we have the classic FUD, and these things are always happening. Like each time Bitcoin is doing very well, there's always going to be some news about China banning cryptocurrencies and just something happening in the world. So we are all already immune to such type of information, but it also does contribute to getting the retail investors to feel like a little bit of fear, and this is obviously going to prompt them to aggressively start selling their Bitcoin and cryptocurrency as well. But I think we're going to have like a major bounce back pretty soon. I think the price of Bitcoin is going to have like a major bounce back, and in yesterday's episode I did tell you about my strategy, and pretty soon I think it's going to come to fruition. So please do not worry, your crypto is safe, and it's just a matter of around 2 to 3 weeks. In about 2 to 3 weeks we're going to be bouncing back, and by mid-June prices are going to be back to their previous prices and all those areas that you guys were following in. So all you have to do is be patient and just give it some time, do other things, brush up on your trading skills, and just be like a better investor. Okay, so use this time to actually learn what is happening to the charts and how you can interpret all these price conditions and charts, so that you can actually get to implement and take or rather make better decisions as far as investing in cryptocurrencies is concerned. So getting back to the market psychology, where are we at this particular moment? Are we already past the euphoria stage and the complacency? So in a grand scheme of things, right, obviously looking at the 3-day chart, right, if we look at the 3-day chart, then yes, we are already in the we're already past the euphoria stage, and we're already past the complacency. So according to the 3-day chart, right, this particular area on the 3-day chart, and the 3-day chart is a very short term type of time frame. It is a very minimal time frame that you can look at. Okay, so if you look at the grand scheme of things, right, the weekly and the monthly, we are still far from getting done as far as the market psychology is concerned. So from a 3-day perspective, of course, we are in the complacency and this particular area, but I don't really think we're going to end up like having going down to these lows where we have the anger and the depression. I don't know, maybe it can happen like in a very short period of time and then just have like a major comeback like that, but I really doubt. So as far as I'm concerned, we haven't even had the thrill yet, because the thrill, technically speaking, is the third Elliott wave, which is the most explosive. So once we get to like sort of continue our upside, right, like once the price of Bitcoin starts going above $100,000 right, that is obviously going to be the market thrill and the euphoria stage. So a lot of people are projecting the price of Bitcoin to go as high as around $200,000 because technically speaking and historically speaking, right, Bitcoin has been multiplying itself by a factor of 10 each bull market. So if you take a look at this, right, in 2013, the highest high that Bitcoin went to was around 235. Then the next bull market, right, the highest price that Bitcoin went to was around 1,105. That was like a factor of that was like literally a 3 to 4x. And then the last bull market that we had in 2016, right, from a high of around 1,150, right? The price of Bitcoin did pump up as high as, 19,000 US dollars. So this time around, due to the increasing scarcity of BTC, right, we're obviously going to see at least minimalistically speaking, at least the price of Bitcoin has to multiply itself by a factor of 5. If the price of Bitcoin is going to multiply itself by a factor of 5 in comparison to the previous all-time high, right, which was roughly around 20,000 US dollars, right, we should at least see the price of Bitcoin hit 100,000 US dollars, conservatively speaking. But I really think it's going to do like between a 5 to 10x price growth from the previous all-time high. So I really think that the price of Bitcoin could go between 200,000 to 250,000 before we actually get to reach this euphoria and thrill stage right over here. So we still have like a long way to go as far as reaching the highest price level that Bitcoin and a lot of altcoins, cryptocurrencies can go this particular bull cycle. Okay, so if we take a look at this, right, I mean, previously 2012 the price was around $13, then it went to almost $200. That was like a price factor of about, I don't know, like way more than 10. So this is one of the reasons why I really believe right now we are just having like a healthy correction, and the cryptocurrency markets are not necessarily in a bubble. We're just correcting. This is a normal healthy correction. So that's all I had for you today. I was just sort of responding to Vitalik Buterin, who happens to be the Ethereum founder, and I just wanted to like be a voice of reason for all the people who are beginning to lose their heads right now. So it's been your boy Muna, aka Beyond 10x. Talk to you a little bit later. Bye.